So it seems like we found our catalyst for this next crypto bull market. Not only has the largest asset manager in the world announced a future spot Bitcoin ETF, but now it looks like their competitors are also following their footsteps. We'll talk about the timelines to all this news, what it means for you, and how to potentially prepare for all this craziness coming up. So if you don't have Twitter or if you haven't been following it, Bitcoin ETF has been trending over the last basically few days with 5.2 million tweets covering hashtag Bitcoin ETF. Why? Well, we had this massive news that BlackRock was releasing their spot Bitcoin ETF. Now it looks like it's rumored that Fidelity is going to make a seismic crypto move soon. Rumors suggest that Fidelity, the world's third largest asset manager with $4.2 trillion assets under management, may be considering either a buyout of Grayscale or their own application for a Bitcoin spot ETF. This is really big news because not only has the largest asset manager, BlackRock, started this trend, but now we have Fidelity, who even in the past has shown interest in the cryptocurrency markets of Bitcoin. But when these two start to do it, when the two biggest whales start to show interest, it's almost going to be kind of like a forceful push to the rest of the industry, because now everyone's going to have to jump on this ship, because eventually it's going to be more advantageous to hold and support Bitcoin than it's not. I mean, at the end of the day, you've got countries like El Salvador, largest asset managers in the world like BlackRock, and just a massive community around Bitcoin to, eventually you're just going to have to hold it, especially once these big whales start to get involved. And to really push that point forward, it looks like BRICS is also considering Bitcoin as an alternative to the US dollar. We've already talked about on this channel as yesterday's video that de-dollarization is happening. BRICS countries and many other countries outside of them are looking to use things other than the US dollar because of our debt problem, of the hyperinflation we're going through. And a lot of countries just want to get away from the US dollar. And so they're looking for alternatives. And while there's no amazing alternative, the two best ones that they're going back and forth with is gold and also now Bitcoin, because as Bitcoin starts to become regular talk around many of these countries and asset managers like BlackRock and Fidelity, a lot of these countries might go to Bitcoin. However, there is one pretty big problem, and that is that 92% of Bitcoin has already been issued. So the supply is extremely low, especially when you've got massive investors like this trying to get in the game, and they came in way too late. And so now there's going to be this massive supply shortage where we have low supply and extremely high demand. So mix that in, and I think we all know what's going to happen is that hyper Bitcoinization is going to happen, where Bitcoin's price is going to go absolutely parabolic because people are going to be willing to pay for the price because now people understand how valuable it actually is. Now, in terms of the timeline, and when we're talking about, okay, so when can this all happen? We have to kind of look back in history a little bit. But first, we're going to start off with the BlackRock ETF timeline. Will Clement says that after flushing out a majority of the leverage and backed actors over the last 2 years, the Bitcoin market has finally had some clear catalysts on the horizon. It looks like BlackRock's ETF approval deadline is 8 months out from now, and the halving is 10 months out. So that correlates so beautifully with the Bitcoin halving, and we're going to go in the charts, but we know how that happens and what happens to Bitcoin's price when it goes through the halving. And even a Bloomberg senior ETF analyst said that the ETF could be set to be approved by the end of the year, which also kind of correlates with a potential timeline when the Fed might stop raising interest rates, which we're going to go into in a little bit. But the biggest thing I want to get into is Bitcoin's price. We're going to be looking at the 2019 or really 2020 price action prior to that halving, and then kind of where we are at this point, right? We know we're 10 months out from the timeline right here. These two blue lines are Bitcoin's halving. So 2020 is on the left and 2024 is on the right, both in April. If we look back in the past, right, the markets never repeat themselves, but they often rhyme. And so we could see some similar price action when we're looking at Bitcoin's price. Now you could see here something very interesting, right? We went through our bear market. We kind of had this rally to the upside, so to say, when people had somewhat of a resurgence back in Bitcoin. And that's kind of what we saw in price action now, right? We bottomed out at these prices at 3,500, and then it rose. If we take from the bottom to the top, it rose 316%. Obviously, that type of price action didn't happen here, but we saw something very similar where we had Bitcoin bottom out in terms of price, right? All the way down here at 15,000. And then we had a rally from these bottoms all the way up here by almost 100%. So if we go back to 2019, let's continue to see what happened at that point. Once it rallied around 300%, what happened is that for the next several months, July 2019 to April of 2020, 10 months of price action where Bitcoin literally did nothing. And then obviously right before the Bitcoin halving, we had this massive spike to the bottom, which, we don't know why exactly, but I'm assuming it could be institutional investors, some market manipulation, whatever you have it, because obviously we have these lows down here, and it's always very interesting to see how this market manipulation happens, where whenever you have a spike to the bottom or to the top, typically the wicks do go past very obvious lows or highs. And so on the short-term time frames, there could be market manipulation, but we know that overall in the long term, we have pretty set trends. So if we kind of take something like this, if we use our bar pattern, which I think is this one, if we take it from here and do some pretty similar price action, right? The time frame is pretty similar because at this point we topped out around June, July of 2019, and that's where we are today at June, July of 2023. And so what we could see happen for the next 9 to 10 months is some very similar price action, right? It's not going to be exact, but when we're talking about Bitcoin's price, the Fed's still raising rates, which we know for the markets is not a good thing, because when there's quantitative tightening in the markets, or whatever the Fed wants to do with the markets, it's a lot harder for the markets to continuously rise because of many factors. But when we look at this price, this could be kind of the fate for Bitcoin and the crypto markets and all markets for the next 10 months, where we're just going to be waiting and waiting and waiting. And of course, people's patience are going to vary, especially the short-term traders, the people who want to make money quick. But obviously, we know the halving is April 2024. And so this could be kind of, where we really see some massive price action, especially if BlackRock and Fidelity's ETF, they do come out at the beginning of 2024, which would be right around this time frame. Kind of right around there, right around this red line. So in terms of timelines, obviously nobody knows what's actually going to happen. But what I see happening is something very similar to what happened in 2019 into 2020, where we're just going to have this lag in price. Continuously, we're going to see Bitcoin fall in terms of price. Maybe it does go up, but I think the most likely scenario here is that people are going to kind of forget about this hype, right? 2-3 months from now, no one's going to be talking about the BlackRock ETF, the Fidelity ETF. They're going to move on to other things. There's going to be other things happening in the markets that's going to take their attention. And so the price of Bitcoin might just continuously fall and fall and fall. Who knows to how low? The potential of it reaching back to 15,000, I think, is a little bit unlikely given the good news that's been coming out in terms of crypto and everything else. When we take a look at this tweet by CZ, the CEO of Binance, they recently just came to a deal with the SEC, basically saying that there's no evidence, absolutely no evidence of any dissipation of assets whatsoever. And this is basically talking about the SEC wanting to freeze Binance's accounts because they were claiming that they were basically commingling customers' funds, and it was not safe for U.S. customers to use Binance. And we know that the SEC has been caught multiple times basically lying and just proven that they have no idea what's going on in the digital asset world. So that's obviously some really good news. But in terms of Bitcoin's price, I'm very, I don't want to say confident, but I do have a feeling that we're going to continuously wane. We're going to fall in between the range. I would honestly say I could see Bitcoin ranging from here at the 30,000 to basically 20,000 levels for, I would say, even the next 8 to 10 months, or at least until those ETFs do come out right before the halving. I don't think we're going to have a catalyst that's going to shoot Bitcoin's price up to new all-time highs before the halving. I just don't really see it happening. So whatever it may be, maybe Bitcoin does shoot up past here. Maybe it goes to 40,000 or something like that. But I think the real catalysts will happen after the Bitcoin halving, or maybe just a couple months before. So That's definitely what I'm thinking. Anything could happen in these markets. I mean, we know that. But again, what I would assume is just kind of like this floating price of right here, and then that's kind of when we really start to see some parabolic moves in the markets. And again, we know that if institutional investors do get into this, yes, they're going to be the ones providing us with a lot of the liquidity and a lot of the money. But again, social risks are a big thing too, because if we're looking at this, the blue line is Bitcoin's price and the red line is the social risk. Now, the social risk is made up of a bunch of things where we look at YouTube subscriptions, YouTube views, Twitter analysis, followers, tons of things, right? So this is looking at basically the crypto market in terms of how is the mass media, or how is kind of like the mass public viewing the crypto markets. And obviously when price rises, so does this social risk. When social risk rises, that means it's a really easy way to think about it. When people are greedy, that's typically when the tops are formed. When people are uninterested and nobody's talking about it, that's also a really good time to accumulate, right? When blood is in the streets, that's when you want to invest. When there's greed in the streets, that's when you want to sell. And when we're looking at price right now, I mean, we could see that every Bitcoin top, right over here in 2018, we had massive social risk all the way up here at 0.86. Again, it falls and it falls down to these lows in 2019, reaching the lows of below 0.005 or 6, sorry. And then obviously the Bitcoin bull market in 2021 rises and we reach tops of all the way up to 0.994. And then we have this collapse, and it looks like we are at these lows where Bitcoin and cryptocurrency interest is, they're at some pretty low lows at 0.158. So again, when social risk starts to rise, this will be a really good chart to look at, because as price rises, so does the social interest in terms of cryptocurrencies. And once we start to top out over here, getting above, let's say 0.8, that would be also one good indication to tell you that maybe it's time to get out of these markets. But as we sit in terms of price and interest, we're not there yet. And again, one thing that I think still needs to happen, and like Benjamin Cowan loves to say, don't fight the Fed, right? If the Fed is continuing to raise rates into 2024, which I don't see as likely, and they've kind of said that they're going to raise rates 2 more times and then they're just not going to cut in 2023. 2024 is looking a little different, but bull markets over the last 50 years have not started while the Fed is raising rates, right? They start only once the Fed cuts. And jumping back all the way to 1975, you could see here these blue lines. The white line is when the Fed starts to cut rates. And you could see indicated here, every single time that they cut rates, it seems like price correlates with rising, right? Every time that they start to cut rates. And as of right now, rates are not going to be cut. They said that they're not going to cut them in 2023. And actually, they're going to raise rates 1 to 2 more times. And so if that's true, it would be kind of foolish for us to think that 2023 would be the year where crypto or Bitcoin rise in price, or that's when the bull market starts. I think it's more appropriate for us to be a little bit more patient, wait for the Bitcoin halving, wait for them to start cutting rates, and then also around this time frame, I would even say February to April of 2024, in this gap right here, that's when we could see prices start to pick up. But that's just my personal interest. If you guys found this video helpful and you kind of like the more like technical analysis breakdowns over the news breakdowns, let me know in the comments. It's really however you guys like these videos made. I enjoy both ways, but whatever gets the point across best to you guys, just let me know, and then I'll try to make videos like that a little bit more. But if this was helpful, make sure you like the video down below. Let me know what you thought in the comments, and until the next video, I'll see you guys then. Peace.